Hey guys, my name is Hiram. Today I'm going to go over Forex strategy and the strategy that I used here on the channel so that you can apply it to your trades and you can continue to win on the Forex market. So let's take a look here. This is a trade that we entered on GBP USD last week. This right here is our entry. As you can tell, it hit our take profit. This was a nice 3-to-1 trade here. And now I'm going to go over the breakdown of how we decided to get into this trade, the strategies that were used, and how we analyze this trade so that we can enter it and become profitable in the Forex market. So let's break it down. All right, guys. So now that you know where we entered the trade, let's kind of take a look back and see why we entered this trade and why this trade was valid. It's not so much that we won this trade, but it's more so understanding why this trade was valid to enter. Whether we win or lose, we need to be entering valid trades. As a trader, that is all you can control, is your strategy and controlling your emotions so that you can enter valid trades, and eventually your edge will eventually prevail. All right, so let's take a look. We're in the 4-hour time frame. I'm going to just step back in the daily so you can see the overall market trend. So you can see here, I'm going to get rid of this real quick. You can see here GBP USD as of July, it started selling, right? It was buying at first right here, but then it just started dumping and dumping and dumping until here we are now. Fast forward in October, you can see that it kind of started to correct itself up. All right, so eventually we know that this market has been selling pretty drastically. So eventually there's going to have to hit a bottom and it's going to have to start leveling itself out. If it wants to continue down, you're going to have to see a correction anyways, or it's going to start leveling out and start reversing its trend. But for now, we're not really thinking that far. We just want to be able to catch and get inside valid trades. So this is the market trend here. As you can see, it was selling, selling, selling. I mean, it can't sell forever, right? So this right here lets you know that there's an opportunity soon enough. There's going to be an opportunity for a buy set up here on GU. So let's take a look now at the 4-hour. Okay. These boxes right here represent Monday. I don't know if you can see them real on my screen, so I'm just going to highlight it. So this is a Monday box here. This is how the market opens and how the market ends on a Monday. You can see here, I have them all mapped out in my chart here every single Monday. So you have, this was the previous Monday, the previous Monday before that, and there's another Monday up here, right? So I trade a combination of Mondays plus the RSI channel for, and I use the RSI channel for the RSI indicator for confirmation. Okay, so let's see what happened here, all right? Let me get my brush. So the market was selling, right? Selling, 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 selling. Okay, cool. Here we begin to start to see the initial, I guess, stages of a correction. It pushes up, comes back down, creates a lower low, but then it's starting to push up again, all right? So here's what we ended up looking for. I used the RSI, the relative strength index, to see where that market can potentially start to bottom out and reverse. So one of the first things that I saw here was that, okay, you can see here in the RSI that we have bullish divergence, all right? You can see here, the market right here made a low. It made a low, and then it made a lower low, right? You can see that there. But now take a look at the RSI. The RSI was giving us the opposite, which means there is divergence here on the relative strength index. So here we made a low, and then we made a lower low. But in the RSI indicator said otherwise. We made a low, and here we made a higher low, which means this, we call this bullish divergence, right? These two are opposite. The chart is telling me one thing, but the RSI is telling me another thing. That tells me that there is a strong likelihood of an opportunity to buy here. But now what most traders will tell you is to just hop in on this trade, and we have, okay, check bullish divergence, get in the buy, get in the buy, get in the buy. We like to wait for confirmation. So that was just one indicator of where this trend might be going and that it might be reversing soon. We don't know if it's going to fully reverse yet, but we know that there's an opportunity here for a buy. Okay, we're in the 4-hour chart. And so, like I said, I look at Mondays because the markets always return to Mondays. And so this is the Monday. This is the previous Monday, right? This is last week's Monday. And so the market broke out of Monday here. And then you can start seeing it creates this bullish diversion pattern here on the RSI. And then the market starts to come back inside of Monday. And this dotted line here is the 50% of Monday. Right there. That's the 50% of Monday. And you can see that the market broke inside of that 50% of Monday. So first it broke out of Monday here from the bottom, and then it made its way back inside. All right. So once we saw that it broke inside of Monday, now we wait for our turn to get into the buy. We have bullish divergence, and we have the market breaking inside of that, breaking above that 50%. Okay. Once we saw, once we saw that the market broke inside of Monday right here, all right, and it broke above that 50%, now we wait for our entry. And our entry is this left shoulder right here, the previous low. And so the market did exactly just that. It broke out of it. It came back inside, closed above the 50%. Now we look for that retest of this left shoulder right here. And what do we have? We have a perfect entry. And this thing is still going up, but we are out of this trade. We got 67 pips. This was a 3-to-1. You can see our stop loss here is only a 19 pip, 20 pip stop loss. Now with GBP USD, you're not always going to get, you can't always get into the market with short stop losses, especially like a 20 pip stop loss. So, I mean, sometimes you got to go a little bit higher than that. You got to give your trade some room to breathe. But either way, it doesn't matter. You can see it was a perfect entry right here. Wick entry, and the market just respected that zone, and it just continued and made its way up. 67 pips later, we are in profit. We are out of this trade. All right. Now I want you guys to see where we put our stop loss here. You can see there's a wick, and we put our stop loss right beneath this wick right here. So entry, stop loss. Let me change the color of it so you can see. Stop loss below that wick right here, below this wick, and you can see still gave us enough breathing room for the trade to continue and make its way up, right? All right, that's all I got for today, guys. Like the video, subscribe to the channel, Homie Trades. Let me know if you have any questions in the comments, and I'll see you on the next one.